Alhamdulillahi Rabbil Alameen wa salatu wassalamu ala Muhammadin Sayyidil Mursaleen wa ala alihi ajma'in. Thank you so much, TAIF, for co-organizing this very important session with Adal Advisory for preparation for the CSA examinees, upcoming CSA examinees. And today I'm pleased to have with me Brother Mishal as well, our head of Sharia at Adal Advisory. And we will try to jointly work on the session today, inshallah. We received a number of questions from the attendees. So the approach that we will take, firstly, I will briefly introduce the CSA exam for those who are taking the exam in the next, within this month, inshallah, and what to expect and how to prepare. I hope most of us are already preparing our best for the exam. So I will first keep some introductory remarks, and then we will proceed with the questions that we have already received. Once the questions are addressed, then we can also concurrently have the questions in the Q&A panel of this session, inshallah. So you can proceed with asking the questions. When you ask questions, please refer to the relevant clauses and standards, so that we can refer back to those clauses and standards when we answer to those queries. For Brother Hassan, if you can, we can also have the questions here, either in the chat box or in the Q&A. I think it will be helpful, inshallah. Jazakumullah khairan. So, as I mentioned, we will just first start a brief introductory remarks for the session today. This session today, as we all know, is about preparing for the session CSA exam, upcoming CSA exam. CSAA stands for Certified Sharia Advisor and Auditor, a very prestigious certification by the topmost Islamic Finance standard setting body, AAOIFI. And it's a privilege for all of us to prepare for it, to sit for the exam, and also to get certified, inshallah. The certification is mainly prepared for Sharia experts who would be sitting as a Sharia advisor or Sharia auditor, but it is also suitable for those who are not Sharia, from Sharia background academically, but want to explore the key requirements of Sharia for Islamic financial institutions, so that they can blend their expertise and knowledge with the key requirements of Sharia and contribute in the Islamic finance industry. Hence, I think it will be beneficial for all of us to prepare properly. And this preparation is not only for the exam, but also to understand the very basic requirements of Sharia when it comes to the different products that we go through in the Sharia standards and also the governance standards. As we already know, the exam will cover 48 Sharia standards and 4 governance standards. The first 4 governance standards and the first 48 Sharia standards, after which there are new Sharia and governance standards as well, but the current format will only cover those. The next format, and this is also the last exam of this format. After that, there will be a new format which has already been publicized by AAOIFI. The CSA exam will be split into 2 different certifications, Certified Sharia Advisor and Certified Sharia Auditor. So we make dua and wish you all the best for the exam. And just before we go through the main session, the Q&As, the questions, basically when we prepare for this particular exam, one thing we should keep in mind is that this is not only, as I already mentioned, this is not only preparation for the exam, but also equipping us with the necessary knowledge of Sharia when it comes to Islamic financial contracts, when it comes to Islamic financial practices in the banks, insurance companies, sukuk, or elsewhere, in the capital market or elsewhere. So when we go through the standards, which we'll try to understand every single bit of it. If we don't understand, let us seek clarification or find further interpretation from the experts. There are many available resources as well now. Alhamdulillah, there are courses with TAIF and also other available resources in the internet. We can leverage on those, but we should try our best to understand the requirements, the key requirements mentioned in those Sharia standards, so that we are able to apply those in the real world, inshallah. It's not only for preparing for this exam and to pass this exam, but to equip ourselves with the required understanding that can help us to apply those in the real world, inshallah. All right. So having said that, I think we can proceed with the questions and answers. Let us take the first batch of questions, which is from the standard number 16 on commercial papers. The first question, do you have the questions in front of you, Madam Shah?
I don't.
No? Okay, never mind. So let me read out the questions and we can answer, inshallah, together. So the first question is about clause number 2, 3 in standard number 16 on commercial paper. Let me share my screen from another device. So it's standard number 16 on commercial papers, and the clause is about 2/3. Let us go quickly to that. Yeah. So in this, the question is, when we lend money or qad hasan with a repayment in another currency, can we fix the exchange rate at the stage of signing the loan contract? If yes, can we use the exchange rate agreed upon between the parties? For example, an exchange rate different from the market rate at the moment of signing contract. Okay, I think the clause referred here. Okay, this is basically, sorry, this was a different question. The question was just to explain the clauses. Okay, so first let's look at this clause, which is this clause on checks. So the clause says a certificate that is issued to a particular person containing an order issued by a person to another person to pay a certain sum of money. I think in terms of defining the check, it should be very straightforward. That it's basically a commercial paper, which denotes that one person is ordering another person. So another person here would be a financial institution to pay a beneficiary or the drawee here, the drawee, a certain sum of money, or we can say the beneficiary a certain sum of money. Now, from Sharia point of view, it is considered a restricted hawala. Maybe the questioner is asking some clarification on this. So our hawala means a transfer of debt. So basically, when the check is given to a creditor, so the drawer here is a debtor to the drawee, meaning that the check, the one is ordering the financial institution to pay a sum, he's basically a creditor, sorry, a debtor. In that case, we will consider this a hawala contract, a restricted hawala contract, meaning that it has particular conditions to fulfill. It cannot be, there are explanations of hawala in another standard, but in general, restricted hawala will come with certain specifications. But if there is no such debtor and creditor relationship between the drawer and the drawee, then we will just consider this as an unrestricted hawala with respect to the drawer. So drawer here is basically the one who is issuing the check, the one who is owner of the bank account. He is the drawer. So when he is a debtor, we will say it's a restricted hawala. When he is not a debtor to the beneficiary or the drawee, then we will consider it is unrestricted hawala. But in both cases, it will be considered a transfer of. This was one question, and then from the same standard, there was also a request to explain clause number 6/2, which is this one, under discounting of commercial papers. So it says that it is not permissible to sell commercial paper that has not become due for an amount similar to its value, which will make it riba al-nasi'a, and nor for an amount that is more than its value, where it will make it more both riba al-nasi'a plus riba al-fadl. So when we sell a commercial paper here could be a check and few others that has been already mentioned in this standard. So in those commercial papers, usually it will denote some debt to be payable to the, let's say, for example, the check that we have just seen, or promissory note, where the promisor is the debtor and the promisee or the beneficiary of the commercial paper would be the creditor. So if now, let's say, the commercial paper, the check, the promissory note, and others is for an amount of let's say $1,000, and when we are selling this for a similar value, but that has not become due, the commercial paper is not become due, so $1,000 payable to the creditor, let's say after 1 month, after 3 months, so the due date has not yet come. In that case, if we exchange this with a similar value, but that is a spot, what will happen is that there will be a riba al-nasiya. So in one side we have the cash amount, and the other side it is deferred. So there will be a riba al-nasiya. But if it's not only deferred, but it's also a higher amount, in that case we will have both riba al-nasiya and riba al-fadl. Riba al-nasiya is where we have a nasiya, nasa means basically a deferment. And riba al-fadl is increase. Usually there are certain types of commodities Prophet sallallahu alaihi wasallam mentioned, especially we can relate it more in case of sarf, for example, gold and silver, where if we exchange gold with silver, or gold against gold, or silver with silver, or similar currencies, and we have increase in one hand, make it rib due to riba al-fadl, because an increase of the similar kind of commodity on the other counter value. So when we sell a commercial paper which has not yet become due for an amount that is more than its value, so $1,000, the value of the is $1,000, but we are selling it at a value more than that, 1,100 or something like that. So we have both types of riba happening in this case, which is riba al-fadl and riba al-nasiya. Brother Mishal, you want to further explain on this part? I think this is a question that we receive usually in other sessions as well. So perhaps you can explain a bit more if you want. Then we can go to the next question, inshallah.
Jazakumullah khairan. Maybe if you allow me, Mufti Yousuf, to just start with a brief introduction. I mean,
sure.
The response for one of the questions on how to tackle the standard as a whole, or this exam as a whole. Perhaps also Mufti can confirm or correct me, but the standards are generally not just, fiqh al-mu'amalat. These standards are fiqh al-mu'amalat. And fiqh al-mu'amalat in general revolve around few basic or general maxims, fiqh maxims, that are specific to fiqh al-mu'amalat. And these rulings relate specifically to two major prohibitions, which are riba and gharar. And a good approach is to try to understand the standards that talk directly to these prohibitions. And I will suggest 4 standards on these prohibitions that you should, as someone who's aspired or planning to get this CSAA certificate, to master these 4 standards. And you will find it easy for the remaining standards to understand the logic behind the different clauses in the remaining, let's say, 44 or 40 standards. Those 4 standards are, the first standard is trading of currencies. And this is on riba al-fadl, which Mufti Yousuf was specifically talking about now. So if you master this standard, you will understand riba al-fadl, and you will see that it's applied to different standards, especially murabaha, ijara, and these sale-based standards. The second one is, by order, is standard number 5, which is on guarantees. And it deals with the different types of guarantees, whether it's related to a sale-based contract or a partnership-based contract. And you will see also the application and the ruling of these standards apply to most of the standards, especially standard 12, standard 14, standard 12, standard 13, and also investment agency, which is standard 40. 41, if I'm not mistaken. This is the second standard. Now, standard 1 on trading of currencies, standard 2 on guarantees. The third standard is standard 19, which is on qard. And this again appears as, it relates to this question specifically. And if you understand this standard number 19, you would understand the other type of riba. The first type of riba is riba al-fadl, as mentioned earlier, and this is dealt with in detail by standard number 1. And this is riba al-nasi'a or riba al-diyun, and this is dealt with in standard number 19, which is on qard. The last major standard is standard number 31 on gharar. And gharar also relates to many rulings, whether it relates to as I mentioned, to sale-based contract, lease-based contracts, partnerships. So it covers many standards. So these 4 standards, you can spend significant time understanding not just the clauses and the ruling, understanding the basis behind these rulings. That would help you a lot in the remaining standards. So this is the first advice. Now to go to this question on selling of commercial paper, there are two. The standard differentiates between 2 types of transaction. The first one is when the debt itself, the receivable, is the subject matter of the contract. So let's say I have a debt or from Mufti Yousuf. So Mufti Yousuf, now I owe him money. He can make that I owe you as a subject matter of another contract by selling it, by telling a seller that you can take Mishal's debt and give me this iPhone or this book. Now, when it becomes a subject matter of debt, this is when it's not allowed according to the standard. Why? Because this is a transaction where the 2 counter values, this is riba al-fadl. The 2 counter values, one of them is deferred, and this is riba al-nasi'a, which is the debt that I owe to Mufti Yousuf, and the other one is in case if it was equal. This is the first part of 6.2. If it's not equal, it's not the same value, then we go to riba al-fadl. If he sold my debt, which let's say it was just $100, and he sold it for cash that is worth 80 or 90. Now we have the 2 types of debt here. We have the debt of not equal value, riba al-fadl, and we have the debt of nasa or an-nasi'a, which is the deferment of one of the 2 counter values. These rulings apply to currencies, gold and silver. So this is riba al-fadl. Now the second type is riba al-diyun, and I'm not sure if it's dealt with here, but probably not. Now the second type of transaction is under 6, or the second part of the question is mentioned to explain 6/4. So that one, my debt to Mufti Yousuf is not part of the transaction. It's outside of the transaction. He made a transaction to sell this or to buy this book for 100. That's the agreement. That's it. The contract is finished. Now, after the contract was done, he said, you can take that 100 from Mishal. He owes me money. And that other party accepted. Now, this is hawala. He didn't use my debt as a counter value. He used it as not as a guarantee or a mechanism to pay the money, and the other party accepted. So this is a payment method, hawala. It's not in this contract a subject matter. So this is my attempt to address these two clauses in the standards. But my recommendation again is to master the ruling, and you will see that you benefit from understanding these rulings throughout the whole of the standards.
Jazakallah khairan kathiran, Brother Mishal. You addressed it beautifully, mashallah. I hope it is clear to the audience today. Okay, some of the other questions that we have received, and I think you can also see in your screen. So number 1, when we lend money or we give qad hasan with a payment, can we fix the exchange rate at the stage of signing the loan contract? Are these, example, exchange rate different from the market rate at the moment of signing contract? This was the question I was first reading out, but it was a separate question, so we delayed it. So in my view, basically, according to the Sharia standards, when we talk about qard is to return a similar kind in as a repayment. So if I take qard of, let's say, US dollar, I must return in US dollar as well. This is in principle. So we cannot agree during the time of qard that the repayment will be in a different currency. However, during the repayment, the both parties may agree to settle it in a different currency, provided that the value of the currency is determined based on the date of the repayment. This is to avoid any possibility of using this as a method to receive extra or additional in the repayment. So, for example, I have seen such cases where people use different currencies just as a denominator. So, for example, they will lend out in the local currency, but they will mention that they are using USD. Why? Because the rate of the current rate of the USD or any foreign currency is being taken into consideration. However, the loan as well as the repayment both are in local currencies, and definitely there is a fluctuation of value, and therefore the increase in the repayment, which is riba. So to avoid that, we must not agree upon a different currency for the repayment during the Qad Hasan. Only if there is such case, it can be agreed upon, but then it should be based on the date value of the date of repayment. Now, the last part of the question is, can we use a different exchange rate agreed upon between the parties? I would say yes. So considering that there was no such agreement on the day one when the qard was done, because in that case qard is not valid at all, because qard is returning the same kind. So considering that there was no such contract in the beginning, later on they agreed upon for a different currency for the repayment, and then on the date of repayment, let's say we have number of values, let's say in Google, in Yahoo, and other international exchange rates. And based on that, they agreed on something in between, which is close to the exchange rate. So that is fine. This is, we have to be very careful when we are dealing with qard. There shouldn't be any way to pay an increase to the creditor, because that may amount to riba. Anything you want to add this on this, Brother Misha, on this particular question?
Maybe briefly, just to, encourage the attendees to go back to the standard that I referred to. This also goes back partially to riba al-fadl. Now, as I mentioned, it's good to understand not just the rulings, also the basis. For example, this one relates to a hadith mentioned by Ibn Umar radiallahu anhuma, where he came to the Prophet sallallahu alaihi wasallam and he told him that I trade with camels, and then I sell based on a specific currency. Let's say based on dinar, which is a gold currency. I sell based on dinar. Let's say I sell for like 10 dinars, but then when it comes to payment, I receive dirham. I receive the amount in dirham. So we convert from 10 dinar to, let's say, 200 dirham. And I do the opposite. I sell in dirham and I receive in dinar. So the Prophet ﷺ told him, you can do so, provided that you don't separate, unless there is full settlement. Now, scholars say that why do we need full settlement here? Because there is also an implicit currency exchange. You exchange dinar for dirham. The same here. You want to exchange one currency for another. So there is an explicit exchange of two currencies, and because of this, it has to be full settlement. It can't. Now, the main ruling in currency exchange is that if it's two different currencies, it must be spot settlement for both currencies. So now, if you and I make a condition that I will sell you in US dollars, but after 4 months or when the installment comes, we will convert it to let's say another currency based on a specified exchange rate. It's like we made a contract between, this is a condition in a contract, so it's binding. So it's like we made a contract of exchange of currency without full settlement. So that's why we need the it has to be full settlement, or it has to be deferred to the time of the settlement. So at the time of payment, we agree now. now you pay me in the different currency, let's say in euro or in different currency, and you fully settle the amount that we agreed upon. So this again goes back to standard number one. So I emphasize again, understand these rulings and understand the basis, even if you don't, if the exam doesn't address the basis, but knowing these rulings and the basis from Sharia point of view will make it easier for you to even know the answer for questions that, or like clauses that you didn't read. But when reading that would be easier.
Jazakallah khairan, Brother Mishal. A wonderful response. Next question we have on standard number 2, clause 4.4. The question is purchasing other currency with charge card. How can we know if the bank settled the amount due without any delay? In general, it can take 2 working days before the seller receives the payment. I think the question is, yeah, this one, on this one. It is permissible to purchase gold, silver, or currency with a debit card or charge card in cases where the issuing institution is able to settle the amount due to the delay. I think, if I'm not mistaken, this has been revised in the newly issued Sharia Standard on payment cards, the Bitaqat al-Dafi, I think, and in that, I think it mentions that it is permissible to purchase gold and silver using such cards. But in general, even if there is a delay of 2 working days because of international transfers and etc., or bank transfers, that is still fine and acceptable according to other clauses of the Sharia Standards. Anything you want to add on this, Brother Mishal? Okay, Jazakallah khair. Next question, is it permissible for the bank to insert a clause in the contract, for example, Murabaha contract, that stipulates that the debtor has no right to make a partial prepayment? For example, I have bought a house with Murabaha to the bank with installments of £1,000 per month for 20 years, and the bank refused my partial prepayment of £50,000 because it doesn't represent full prepayment of remaining debt. So basically, it mentioned a specific scenario of prepayment or repayment by the debtor. So between the bank and the client, when the Murabaha is concluded, considering the Murabaha as a deferred payment Murabaha. Usually Murabaha in default doesn't mean that it must be a deferred payment mode, but that is what being practiced in Islamic financial institutions, that we make it Murabaha, a bay' mu'ajjal, a deferred payment sale. Now in that scenario, the question is, can the client, can the bank stipulate, the bank here is creditor, can the creditor stipulate that the debtor has no right to make a partial prepayment? In other words, can the debtor dominate like how the payment plan will be, all right? So from a general fiqh mu'amalat sense, in a deferred payment sale, in a general sale, in a general bay', the right of the buyer, right of the seller is to receive payment, and the right of the mushtari, right of the purchaser or buyer, is to receive the goods, products or services, right? So anything that is related to payment, it's a right of buyer. Now what happens in a bay' mu'ajjal, in a deferred payment sale, that the owner of the right, in this case the seller, he waives away his right in a certain way, in a certain condition. So it's up to him to dictate the rights, how you want to put it, the conditions of the rights. So for example, if he says, I'm okay if you pay me after 2 days, okay, no problem. If he says, I'm okay if you pay me in 10 installments, it's also fine. But if he dictates one way to receive the payment, then usually it will be binding on the other party if he accepts to proceed with the sale. That's a general fiqh mu'amala. I cannot recall any particular clause. Brother Mishal, maybe if you want to add anything on it.
I also don't recall a clause that interests me.
You agree with the response?
Yes, I agree.
Okay, Jazakallah khairan. Okay, next question is about, I think, It's most probably it's the same. Let me see. Oh, okay, it is SS21. So let's navigate to SS21, which is on financial papers, shares and bonds. The question is, can you explain us in details how the scholars determine the figures of 5% and 30% on section? Oh, okay. So I think the questions are related to various financial screening we do in the stock screening or various other such screening, particularly in the Islamic capital market. This is on 3.4 to this one, where it says that the collective amount raised on loan or interest does not exceed 30%. Then there is also the total amount of interest-bearing deposits should not also exceed 30%. And then we also have here the 5% that the total income generated from prohibited component does not exceed 5%. So we have another percentage here. So the question is basically where we get those from. How did the scholar determine those figures? And this is where it is. I echo what Brother Michal reminded us earlier, to go to the Sharia basis as well to have further understanding. But let me just try to phrase it in a easy, understandable manner. So basically, if we go to the basis, we'll find that raising loan on interest is not permissible, from the sense that it is a ribawi contract, right? This is agreed upon and no doubt. Taking interest bearing deposits, similarly, when we have interest, when we have riba, it is also a prohibited contract. Anything dealing with riba, we cannot enter into it. And finally, when it comes to prohibited income, let's say income generated from selling wine, alcohol, pork, etc., it's haram. No matter it's 1%, 2%, or 3%, or 0.05%, whatever. Now, where do we get the ratios from? See, these are when we are making the investment decisions into a certain company. When we are the business owners, we should make all means so that we don't have to enter into any ribawi contract, not a ribawi deposit, not a ribawi loan. Ribawi means interest bearing loan, not to sell or involve in selling any prohibited goods or services as a business owner. However, when we are investing into companies owned by someone else, managed by someone else, in other words, companies, let's say, listed on a stock market, or maybe through some crowdfunding, etc. So do we just consider, because they are taking interest-bearing deposit, interest-bearing loan, do we consider them completely haram companies so that we don't invest? This is where the Sharia advisors of the lot of deliberation, they have come up with a ratio, as we see in this Sharia standard as well. They have capped it to 30% for interest-bearing loan and interest-bearing deposit. Based on what? Considering that 30% is not majority. There is a hadith which denotes, echoes this. As-sulusu was-sulusu kathir. 1/3 is considered kathir. So 1/3 and more would be kathir. Less than 1/3. 30% is less than 1/3. It's not kathir. It's not majority. It's a very minority. And the majority of the transactions are not ribawi, not interest bearing. So from that point of view, we may be able to consider this as Sharia compliant, meaning not Sharia non-compliant. The 5% has the same logic as well, that it's a very small, insignificant amount in the current customary practices. So meaning that even if it's 1%, it is haram. There's no doubt. However, if it is below 5%, we may still invest into it, subject to further purification once we receive the dividends. So later on, we will find in the same standard, we will find the details about purification, in the gist of which is that when we receive the dividends, which includes prohibited income, then we have to work out how much of the dividend that I have received consists of the prohibited income. And thereafter, we donate those prohibited income to charity. We don't consume that for ourselves or for our purposes. So with that combined, I mean, we enter when it is below 5%, and then later on we purify. With that, scholars have permitted that we can still invest with those companies. But again, we as the business owners, we should not tolerate even 1%. We should have our business completely free of riba, completely free of any prohibited income. Brother Michal, this is a question that we often receive in our preparation classes. You want to address from your perspective anything?
I want to re-emphasize maybe hashi on what you said. So the first one is it has to be understood, especially if you're a decision maker, whether you're a shareholder or you're a business owner. It's not, scholars did not say that you can engage in this by if it's 30% or if it's less than, if the income is less than 5%. This is against this is this is prohibited. You should not accept riba or pay riba. If you can make a decision or vote, your vote should always be against riba. Your business should always be against riba. It's by no means a concession for you to practice riba or for you to agree with riba. However, in terms of investments, scholars have debated, and the AAOIFI standards take this view. Now, just as you're becoming a CSA or as you're a CSA candidate, it's good for you to understand actually the logic behind these percentages. So when you counter questions, whether internally or from others, you know what scholars say. You don't just agree with some of the, let's say, shubuhat or some of the criticism that is not founded. Now, 30% is, as Mufti Yousuf mentioned, it's based on الثلث كثير. Now, the general criticism that you would receive is that this hadith relates to wasiyah. That doesn't relate to everything. But scholars, especially the Maliki scholars, apply this percentage to different rulings. So, because it's the Rasul said that الثلث كثير, a third is a lot, this has become a basis for different rulings. So this is where that 30% is extracted. And the fact that the hadith talks only about wasiyah doesn't negate the logic behind it, because scholars have used it. As for the 5%, I have read, maybe I will share with you, what the contemporary scholars say about this 5%, and I have come across two justifications. One of them is by Dr. Yusuf Al-Shubairi. He's an expert in the AAOIFI Sharia board. And he mentioned that 5% is according to the norms according to the accounting norms. According to accounting norms, 5% is considered minimal. Is considered not significant. So this is according to Al-Shubairi. According to another scholar who's also involved in conferences with Islamic Finance, his name is Ali Abul Aziz from Jordan. He mentioned that this might be, based on his knowledge, he said this might be based on a Hanafi rule that makes ghabn fahish. Ghabn is when something is overpriced and there is an element of cheating to the other party. So when ghabn, and that ghabn, usually there is some overpricing or underpricing, but is acceptable. They call this ghabn yasir. It's acceptable ghabn. But when it becomes to an unacceptable level, then there are related rulings. I'm not discussing these rulings here, but Hanafi scholars say that if it exceeds nisf al-ushr is 5%. If it exceeds nisf al-ushr, then it becomes fahish, it becomes considerable. So Ali Abul Aziz mentioned that this might be based on this. So this is not part of the exam, but part of understanding why scholars, and it's maybe Mufti Yousuf can perhaps provide a brief introduction on how standards are developed. Who are the types of scholars that involved in developing these standards? So we don't accept anyone who just come and say anything about these standards without really understanding these standards.
Jazakallah khairan, very important perspective given by Brother Mishal. And yeah, you reminded me of the Hanafi view. We can find this in Majalla al-Ahkam al-Adliya as well, which was compiled during the Ottoman Caliphate for decisions being made by the judges, is particularly on fiqh mu'amalat and also fiqh mu'amalat maliya. And we can find that ghaban fahish, or excessive pricing, overpricing, has been further defined not only 5%, I remember there is 20% as well, but that is for real estate. For day-to-day necessary items, I think that is 5%. If I'm not mistaken, then we have 10% benchmark and then 20%. So they made some tiers. But very good understanding. I hope the audience today, especially the one who asked this question, will get a very good overview of it. Let me proceed to the next question. It was we'll do a brief, inshallah, about the scholars and the standard development process a bit, Brother Mishal, a bit later, inshallah. Let us go through a few other questions. Okay, so the next question is about this clause 3461, which is basically a subclause of this, which mentions it is obligatory to eliminate prohibited income specific to the share that is mixed up with the earnings of the corporations, and this is in accordance with the following. Then it mentions the elimination of prohibited income is obligatory on one who is the owner of the share, whether an investor or a trader, at the end of the financial period, even if the payment is due at the time of issuance of the final financial statements, whether quarterly, annually, or for other period. Accordingly, elimination is not obligatory for one who sells the shares before the end of the financial period. Okay, and then there are a few other sub clauses, and then you can see there is one clause which I have highlighted in my own Sharia standard that I use for my own references. So basically, this is the part that I was highlighting previously, that even if the prohibited income is below 5%, it does not mean that it has become halal. It is still prohibited. It is still haram. It needs to be cleansed. It needs to be eliminated. It needs to be purified. So this is the method that has been mentioned. Now, who should purify it? The one who is still holding the shares at the end of the financial period. Because at the end of the financial period, this is where we are firm that this income is a real income, out of the total income. Before the financial statement is there, before the financial period is ended, this is not ascertained. This is why the one who sells the shares before the end of the financial period, it is not obligatory on him to purify it, because he did not get the right to that prohibited income. Vice versa, the one who has hold the shares until the end of the financial period, he is the one who has got the right to that prohibited income. Therefore, he needs to cleanse it. He needs to eliminate that prohibited income. Now, how? This is further explained later on 3464 and other clauses, which will, I think, is a self-explanatory. So we'll just proceed to another question, inshallah. Okay, so let's proceed to next question, which is from standard number 9 on ijara. This is the standard. The clause is 8/8. Let me just quickly navigate to that. Sorry. Okay, so the question is about in clause 8. Okay, let's go to the clause 8 is about transfer of ownership in the leased property in ijara muntahiya bit tamlik. By the way, ijara muntahiya bit tamlik is the ijara that ends with transfer of ownership. It could be through a sale contract or through a hiba contract. Okay, so this is the very last clause of the standard. The question is, okay, let's read the clause first. If the leased asset is destroyed, or if the continuity of the lease contract become impossible up to the expiry period, without the cause being attributable to the lessee in either case, then the rental is adjusted based on the prevailing market value. That is, the difference between the prevailing rate of rental and the rental specified in the contract must be refunded to the lessee if the latter rental is higher than the former. This is to avoid loss to the lessee who agreed to a higher rental payment compared to the prevailing rate of rental in consideration of the lessor's promise to pass the title to him upon the expiry of the lease term. See what happens in ijara muntahiya bit tamlik, which is an important finance instrument for Islamic financial institutions, is that this can have two forms. In one form, the bank and the client co-own the asset or the property, and then gradually one of the client will increase his share in the property, or there will be no gradual share, but at the end there will be a transfer of ownership. Now during the tenure there will also be an ijara contract usually, and that ijara will be that the client is leasing or the renting the portion of the ownership by the bank. So the installment is calculated in a way which incorporates two things. Number one, a monthly installment to increase the ownership of the client. Number two, the rental portion for the usage of the portion owned by the bank, right? So at the end of the tenure, let's say 5 years, 10 years, whatever, usually there will be a sale contract where the price would be maybe the installment of the very last installment, or there could be also a hiba agreement, which just denotes that there is a transfer of ownership, whichever is more feasible. Now, this may happen with co-ownership in the beginning or without co-ownership, as I mentioned, just like any financial lease, where the lessee will own the leased asset after the tenure. Now, what the clause is talking about is that considering that at some point the asset is destroyed and it cannot be continued until the end, and therefore the transfer of ownership also doesn't happen. Now, how will we adjust the remaining rental, etc.? So the gist of this clause is that the lessee should only be obliged to pay a fair rental because he agreed to a higher rental only because he is going to have the ownership transferred to him at the end of the tenure, which is not happening now. So in this circumstance, we should not impose that higher installment, which was calculated based on that scenario. So that's the very gist of this clause. Now, what is the question? Let's go to the question. The question is, above clause is not being practically applied in Islamic banks dealing in ijara on the basis of muntahiya with tamlik, especially Islamic banks of a country. A country name is mentioned. Now, the question is why? I think my overall response would be that the same situation we will find in many other clauses of many other standards of AAOIFI, that practically in many countries the standards and clauses are not adopted yet. And I think this is where our role is. Whoever is taking this CSAA exam, being the brand ambassadors of AAOIFI standards, accounting, governance, ethics standards, it is our job to see how we can apply those standards, those clauses. And this is where what Brother Michal mentioned earlier, to briefly mention about the standard development process is relevant, because we have to take into consideration that those standards, Sharia standards, governance standards, or all of these standards have gone through a very stringent process where it involved the Sharia scholars from all different sound madhahib, reputed scholars, went to several iterations, took public opinions, right, from the exposure drafts, then made more amendments, and until at the very end, those standards were issued. You can just look into this standard, for example. This was issued in 2002, right? But if we go to the usually there is the history. Yeah. If you go to this brief history, you can see that this standard is basically started in 1999, and then there was this lot of meetings, right? A lot of meetings, etc. So many meetings, and finally, in this is amendment. Okay, most probably, yeah, this one. This is also amendment. This is the one that were first issued. So finally, in 2002, the committee basically adopted, the board adopted the reformatting of Sharia rules, etc. 2002 and 2001. So usually at least 2 to 4 years we'll see for each and every standard. Now, when we take those for a particular jurisdiction, definitely we'll find a lot of challenges to adopt it in consideration with our local jurisdiction rulings, etc., and the readiness of the market. But I think it is our job. If we try our level best, we can make it much better, inshallah, every day by day. I think next question, Brother Michal, I will pass to you. The next question is about Sharia standard number 10 on salam and istisna. Let me read out the question and then translate to you, inshallah. It is on clause number 3(2)/4. Okay. Yeah, it is this one. This one. So the question is, if it is not permissible for al-Muslim fee to be an amount of currency, then how currency salam is permissible? As in, then again, a country is mentioned, as in that country, Islamic dealing in currency salam as a tool to hedge against currency devaluation where both capital and Muslim fee are currency. So any response to this, Brother Shah?
Okay. So now the ruling is again based on standard number 1. So if you understand riba al-fadl from standard number 1, you would understand why as a salam contract cannot be applied to currencies, because there is no spot exchange, obviously. Now this is the view adopted by the standards and also by Majma' al-Fiqh al-Islami. However, it's understandable that these views are not considered as based on ijma' of all the 4 schools. Some rulings are, the AAOIFI standards prefer a view over another view. And in Pakistan, and Mufti Yousuf can correct me, the view of Hanafi is that the illah of the ruling that applied to gold and silver is not a thamaniya, so it doesn't apply to current currencies in terms of riba al-fadl. Now, there is another note that I would like to share after this, but generally, riba al-fadl is based on illah. So if we were talking about gold and silver, the illah that is adopted by AAOIFI is that these two metals are not allowed to be exchanged except on spot if they are of different kinds, because they are the currency of things. This illah is chosen by some schools, but in Hanafi school, this illah is not chosen. There is another illah, maybe Mufti Yousuf, as a Hanafi scholar, he can elaborate what is the illah in Hanafi. But because this illah doesn't apply, the ruling that relates to gold and silver does not extend to currencies. It extends to other items. So salam becomes allowed. But this is not the view of AAOIFI standard. This is the view of Hanafi school.
Jazakallah khairan, Brother Michal. But I think this might not be the main reason why it is being used, because in Hanafi, so we segregate out of the 6 items mentioned in the hadith of riba al-fadl, we segregate gold, silver, and then the four other items. So for gold and silver is the same as samaniya. We consider that. So the ruling of sarf that we consider in AAOIFI Sharia standard is the same that we consider in Hanafi as well, if I'm not mistaken. However, for the rest 4 items, the illah that we consider is kail ma'al jins. So from currency point of view, I think there is no differences from this, because we cannot do salam on currency. However, the practice, again, as I mentioned, there are many such practices, not only in that country, but also in my country as well, and many other parts of the world. There are many practices which needs to be relooked. So usually in these types of questions, I always try to address in this manner that, see, we have gone through a lot of amendments, changes over the time for particularly Islamic banking and finance, and yet until today there are a lot of issues, Sharia issues, regulations, these and that, and it's a long journey. So when you go through those Sharia standards, you find issues that are not in practice in your jurisdiction, right? It's not only your country, it's all over the world. We are having a lot of things which needs to be corrected gradually. We cannot do overnight, but these things need to be consistently improved. That is the key. So when you come across such issues, since now you are preparing for CISA, just mark it that this is something that I need to further look into it, let's say after the exam, inshallah. Then after the exam, see how you can change or update the process, even if it's a bit. And I believe if we do this collectively, then we can have better processes which complies with Sharia far better, inshallah. Okay, let's go to next question, which is from Sharia Standard number 12 on Shirka, and inshallah I'll try to address that. The question is from clause number 507. Okay, I think this is the question. And seems like I also had highlighted in my book. So let us read the question first. It is permissible for one of the partners to give a binding promise that entities that entitles the other partner to acquire on the basis of a sale contract is equity share gradually, according to the market value or price agreed upon the time of the acquisition. However, it is not permitted to stipulate that the equity share be acquired at their original or face value, as this would constitute a guarantee of the value of the equity shares of one partner by other partner, which is prohibited in Sharia. Okay. Now, question is, in a certain country mentioned here, Islamic banks use diminishing musharaka for Islamic house financing, in which cost price of banks or bank share in the asset is divided into units, which is then calculated on the cost price and principal amount disbursed by the bank, and customer purchases the units gradually in addition to rental payment. As unit price is calculated based on the principal amount, in this way, it is tantamount to guaranteeing in bank shares in the diminishing musharaka. Is it allowed? In this way, bank's equity share is acquired by client, customer at their face value, original value. Okay, I get the question. The question is here in this standard, it says that we cannot have a face value, we cannot have original value or face value. However, rather than we have to leave it to the market value or a price to be agreed upon at the time of acquisition. All right. The binding promise may say that one party says, I will purchase your share. Let's say I sell to Brother Michelle, I will purchase your share. At what price? At a price that we agree upon during the sale, or maybe at a price that is prevailing in the market. All right. So this is permissible. But if we agree upon a price which is at the face value or the original value, then this amounts to a guarantee. Now, what is the problem if we guarantee the capital of another partner? This amounts to when we guarantee the capital, it no longer remains capital of the musharaka. It becomes like a qard, right? And when it becomes qard and we give anything in addition to that, it makes it riba. Kullu qardin jarra naf'an fahuwa riba. So that's the reason why throughout this standard, it is mentioned that one party cannot guarantee the capital of the other party. One party cannot guarantee the FX exchange rate of the other party. There are many other such similar things. Even if the guarantee comes from a third party, he needs to be a real third party, meaning that he does not have any contractual relationship, any ownership of 50% or more, etc., etc. All those are mentioned within this standard. Now let's come to the practice that the questionnaire you have mentioned about in a particular jurisdiction. Firstly, we don't know the whole practice. Like maybe it's just determining the purchase price of particular unit, which if as you mentioned, the rate of the price of the unit is determined, which is tagged to the original price of the face value. But does this amount to the guaranteeing the capital of the musharaka? May or may not be. It depends on understanding the whole structure. So I think we cannot comment. This is number one. Secondly, what if the installment of the diminishing musharaka, which is basically a combination of share increasing the capital and also ijara rental. Previously, I mentioned this briefly when we were discussing about the ijara muntahiya bit tamlik. Maybe the ijara component, when it comes together with the capital, it is determined as an installment, but is the ownership transferred every month? May not be. Rather than maybe the ownership is transferred at the end. So during the it just stays an installment rather than a price of the share. If it's not price of the share, then it may not be considered as a guarantee as well. So my answer to this, to your question is that we need to look into it furthermore. and then only we can comment. Anyway, Jazakallah khairan for your question. Let's go to this next question. Again, there are other questions about diminishing musharaka. We'll come back to it later on, inshallah. There's one question about the same standard. Let's go to it for about 31. Okay. Sharia standard number 12. Please explain proportionate loss. Partnership in common is a form of financing partnership. This is the definition of partnership of commandum. Let's just quickly go through it. The clause number mentioned here is mistaken. So I think I cannot refer to the actual clause for most probably. Do you remember where is partnership in commandum, brother Mishal? Never mind. If you don't find it, let's come back to it later on, inshallah. Okay. There are a few questions we have from standard 35 on zakat. Let me read out the question, and brother Mishal, you can address it, inshallah. Okay. This is on standard 35. Yeah. Clause 543. With this, I think we are mostly done with the questions received from our form, Google form, and then we'll proceed with the questions received right at this session, inshallah. Okay, this is the question. So here it mentions khars, or estimation by experts, can be adopted when the agricultural products or fruits are ripe. 1/4 or 1/3 can be deducted and left to the owner, and the rest becomes subject to zakah on the basis of khars after the produce is dried. Zakah can also be paid in terms of value. So this is the standard clause that we are looking. The question is why 1/4 or 1/3 should be deducted. The question is why. So this is on the zakah on agricultural produce or fruits. Can you recall, brother Mishal, you want to address this?
I'm not really sure. I haven't gone through the basis for this one.
You haven't gone through. Okay, let me try. Okay, so if we look at the zakah on agricultural fruits and produces, the nisab is 653 kilograms, and there is basically no haul. Now, how do we pay zakat, or how do we calculate zakat? So 653 is the nisab, meaning it is the minimum amount when we'll consider zakat is wajib. Now, the applicable zakat rate is ushur. Ushur is 1/10 for the produce of non-irrigated lands. And if it is nisful ushur, or 5% for the produce of irrigated lands, meaning that if the land is irrigated naturally with rainwater and also maybe lake, surrounding lake, etc., without our human intervention, without any additional cost, then the applicable zakah will be 10%. But if it is irrigated with human intervention, we need to put pump, this and that, then because there are additional costs involved, so the zakat rate will be lower, which is 5%. Now, if it is in between, right, we don't know. I mean, we know some of it are irrigated, some of not irrigated. There is some rain, but at the other part of the time it's not rain, etc. Then the zakat rate will be the average of the two. So if we plus 10 plus 5, 15 divided by 2, it becomes 7.5%. Now here it mentions okay, if we go to the next one, in calculation of the nisab, different types of the same kind of produce can be added together, such as different types of the same kind of grain. By the way, this is zakat on the agriculture, zakat which is also in our parts of the world more known as ushur, not as zakat, but it is also a kind of zakat. It is not zakatul amwal. So in calculation of the nisab, the same types, different types of same kind of produce can be added together. Let's say rice of different kind, wheat of different kind, we can add together, and such as same type, different types of grain or fruit. where different kinds of produce and fruits cannot be added together. We cannot mix mango with orange, or maybe different types we cannot add together. So each kind should be having its own separate nisab. So the nisab again is 653 kilograms, and we only have to pay the zakat on those agriculture when it is 653. It makes no difference when the agricultural produce or fruits owned by the same institution or company are in different geographical locations. So let's say a company owns lands in 4 different geographical locations, but it all sums up to 653 kilograms, then they have to pay that zakat. Now comes the clause where the question is, the question was, why 1/4 or 1/3 should be deducted? Okay, khars can be adopted when the agricultural produce products or fruits are ripe. 1/4 or 1/3 can be deducted and left to the owner, and the rest becomes subject to zakah on the basis of khars after the produce is dried. Zakah can also be paid in terms of value. Okay, this 1/3 or 1/4 is basically for the, if I am not mistaken, if I remember correctly, this is for the personal use of the owner. So after 1/3 or 1/4 is left, the rest we will see if the nisab is there, and we can do the estimation, and based on that we can make the zakat. Now it could be on the basis of khars after the produce is dried, also can, no problem. Especially this is when the agricultural products or fruits are ripe. If the fruits are not ripe, then it is different. But if the products or fruits are ripe, in that case we can keep some for the owner and make the rest eligible for zakat, considering other things that we have mentioned earlier, the nisab and the rate of 10%, 5%, or 7.5%. So the basis of 1/4 or 1/3 is just the best estimation for the owner, if I'm not mistaken, based on the number of members of the family and etc. Wallahu alam. I could be wrong as well. Wallahu alam. Okay. Let's go to the next question, inshallah, from the Q&A tab. I think, Brother Mishal, you have the Q&A as well. Maybe you can start with the one from Sahlur Rahman. Which area we want to focus in all Sharia standards? There have 3 parts for Sharia standards about its meaning, final supporting evidences from different sources. Yeah. Tafaddal, Brother Mishal.
I mean, as a general advice, I gave it earlier. I mean, to focus on for the purpose of understanding, also, I mean, being able to address the different questions, focus on the 4 main or major standards. I repeat them again: standard number 1, number 5, number 19, and number 31. If you understand these standards deeply, you will be able to understand different clauses in all of the standards. There are standards that are specialized and don't, I mean, these standards don't apply to them directly. Okay, I will. So standard like standard number 35 on zakat, you will not find rulings that relate to riba and gharar in standard of zakat. And zakat is a difficult standard, so you need to pay special attention to it. It doesn't apply to all the standards. It doesn't. Your knowledge from the different standards will not transfer to this standard. So you have to pay attention, especially to zakat. Standard number 6 on conversion of conventional banks to Islamic banks. This is a very operational standard, and it deals with the different contracts that the existing conventional bank has and needs to convert, and how to deal with the different arrangements, profits, or like interest that was received before, interest that was received later on. So it's simple, inshallah, but it needs special attention. So these standards, pay special attention to them, standard 6 and 35. But the fundamental standard, I mean, again, for the benefit of those who came later, the 4 major standards that you should focus on: standard number 1 on trading of currencies, standard number 5 on currencies, on guarantees, standard number 19 on loan, and standard number 31 on gharar. If you understand these standards deeply, it's easier to read throughout the remaining standards and to understand. So for these standards especially, focus also on the basis. This question asks about the 3 parts of each standard. The Sharia clauses, of course, it's part of the exam. the Sharia, the process or the meeting or the process of issuing the standard, this is not part of the exam. The Sharia basis, as far as I remember, Mufti Yousuf can confirm, it's not part of the exam. But as I mentioned, especially for the 4 standards, it's essential that you understand the basis. But whether it applies to all the standards that you need to understand the Sharia basis, Mufti Yousuf, inshallah, can confirm. تفضل يا شيخ يوسف.
Sorry, I missed the last part of what you were saying, but Michal.
Yeah, I was saying that Sharia basis is not part of the exam generally.
Right. Sharia basis is not part of the exam, but as repeatedly emphasized by Madam Shal and myself, we strongly encourage all of you to go through the Sharia basis as well. Usually, in my experience, it's rare to go through the entire Sharia standard later on. So this is the time when you prepare, please also go through the Sharia basis as well. Secondly, even if the Sharia basis is not part of the exam explicitly, but implicitly, there will be questions which, if you know the Sharia basis, it will be easier to address, inshallah. Okay, next question from Saka. Assalamu alaikum. I have been writing this exam for the 6th time, but yet to know what I need to do right to pass this time round. Firstly, wa alaikum assalam wa rahmatullah, and good to know that you have been not giving up. You have been trying and again. I think that's the most important part. And we make dua that you pass around this time. But what is important for you is to understand the concepts, because even if there are 48 Sharia standards, the key concepts are only a few. If you understand those concepts properly from fiqh mu'amalat perspective, it will be very easier to address. The same logics are being used to prepare the entire Sharia standards. The Sharia logics, because the haram, the prohibited are only a few, but it requires guidance of the experts as well. So we hope and make dua this time you pass around. You may also take lessons from experts, like TAIF has a course on Sharia standards. You can take that as well for you to ensure that you understand the Sharia standards properly, inshallah. May Allah make it easy for you. We have another question from Sahlur Rahman. Is there any updated version of the Sharia standards? Currently, I'm reading issued by AAOIFI in 2017. The entire AAOIFI Sharia standards are now available for free in AAOIFI.com. So please go through the latest ones. There are a few amendments made during those years, even though the previous standards have very small amount of amendments, but it's good to always have the latest ones. Another question by Abdullah, Naimatu Abdullah. Assalamu alaikum. Can we briefly discuss the 2 basic standards now so we can get the understanding? Most probably, the audience is referring to the standard that you have mentioned, Brother Mishal, the 2 standard. I think it will be quite long, but maybe you want to, if you just want to give a brief overview of the 2 standards that you mentioned. I think it was most probably it was related to the qard and also guarantees, etc.
Perhaps confused. We can I mean leave this to last if the time allows.
Okay, sure. Let's see, yeah, inshallah. Okay, next question from another person. Can we consider that the limit between Bay'al-Aina and real sale is 50%? Example, I own less than 50% of a good that I want to buy with Murabaha. I did not get the question properly, but is it maybe he's asking something like, is there a limit between Bay'al-Aina and real sale 50% in the sense that if he owns something less than 50%, he can sell it back as Aina? I mean, it will not be Aina. I don't think we can quantify this way. Is it possible, Brother Mishal? To avoid Aina, can we say that the first buyer who is going to sell back to the seller has to own less than 50%?
It's not very clear. He would be selling on behalf of his partner as well, and then
the question is not clear, but I'm just assuming maybe he's asking that what if he owns less than 50% and then sells his back to the seller? Then if he owns less than 50%, who owns the rest? And wouldn't it be sold together to the actual seller? I think it's quite confusing, because even if we consider that his ownership is less than 50%, but when it is sold to the seller, the whole item is sold. We are otherwise we don't consider it sold. If we consider a partial sale, which may only happen in maybe real estate or such, where partial sale is beneficial. So I think the question is not clear. Please question again, so that we can address your question, inshallah. Okay, Saka said, so I need your general advice on exam as well as any supporting materials. For supporting materials, I think there are few. You can go through TAIF as well. There are few, there are courses, there are exam questions. You can also navigate to iFikr, ISRA. There are also some other materials, presentations, as well as some questions you can practice. And in general, you have to read and understand under some guidance of the experts. Thank you. Rafiu asked this question, in September 2023, CSAA exam will be based on latest version of the Sharia standard. It will be on the first 48 Sharia standards, and we should consider the latest versions, yes, because maybe there are some amendments done. I don't know which versions you have. The very old versions like 2010 or some other versions, there are some amendments after that. So it's good to have the latest versions, inshallah. Okay. September 2023 exam will be the last CSAA. Okay. What will be the fate of those who do not pass the exam in respect of receipt? The initial decision was there should be no new exam in this exam this September 2023, because there is no receipt allowed. So only receipt would be allowed in September 2023. But due to high demand globally, AAOIFI allowed new exams also for September 2023. Now, what happens if you don't pass this exam? I would say there is nothing to lose. You are going through the entire Sharia standard, and it's a very big thing that you are going through. Secondly, there is also a pocket certification AAOIFI is introducing. It's a certificate of proficiency only on Sharia standards. So you can use the same knowledge that you have gained for that exam, for that certificate. It will not be called Certified Sharia Advisor or Certified Sharia Auditor, but it will be a certificate of proficiency in AAOIFI Sharia standards, right? So you can still use that, inshallah. Okay, for any latest standard, please go to AAOIFI.com. It's for free in Arabic, English, and everything. Okay, in chat box we have few questions, not questions actually. I think there is one question only. Clause 4.3 of standard 12. Most probably we have already addressed that, but let's see. Standard 12. It's already Asr Azan here. We'll try to wrap up as quickly as possible, inshallah. It's 4.3. Partnerships. Oh, okay. This is the one that there was a question. Partnership in commendam. Definitions of partnership in commendam. Partnership in commendam is a form of financing partnership. This is because the personality of the operating partner is important for the sleeping partner, and because there is a difference in terms of determination of ownership of the partners, whereby the ownership is calculated based on disproportionate loss and not on the basis of proportionate shares that are equal in number. You want to share this further about this, Brother Misham?
Yes. Maybe briefly, I mean, to open a door for the brother. This is different from the normal form that we deal with in our, day-to-day work or business. the main difference is that usually companies or most of companies, they have a limited liability. That limited liability is limited by the capital that you invest in. I mean, as a shareholder, you invest in, or as a business owner, you invest in. So this is the general form, a limited liability company. But this type of partnership, it's not limited. It means that if you have a debt, if you incur a debt, as this form of company incurs a debt, then as an owner, I'm responsible even in my personal assets. So as if you deal with this type of partnership, the personal asset of the owner becomes subject to fulfillment of the debts that are owed by this company. So so this is why the person, it says that it's important for a sleeping partner because personality, the personality of the partner is, or the operating partner is important, because if he's wealthy, means that as someone who deals with the company, I have more confidence that I will get back my money. Even if the company cannot pay, I can go after this person specifically. So this is just as I mentioned, as a door to understand this type of partnership, or the difference between the normal limited liability companies or partnerships and this type of partnerships. The remaining rulings are related to this specific this specific characteristic of this partnership.
Jazakallah khairan, Brother Mishal. There is so the related question that the same brother Tahir is asking: what is meant by disproportionate lots in partnership in commendam? This one basically.
Yeah.
If you can explain that. Yeah.
It means that we don't have shares in this, from my understanding, not practical, but based on the reading of the standard. It doesn't mean that we usually shares have the same value. Each share is equal to another share in terms of price. But this one, it doesn't issue shares. It means that, let's say I own 2/3 of this partnership. I put the capital and I own 2/3, and then another partner puts in 1/3, and he owns 1/3. So my share is 2/3, his share is 1/3. We don't have shares to trade, and our lots in ownership of the company is different. It's not proportionate. It's not like 10 shares and I own 7 and you own 3. No, I own 2/3 and you own 1/3. Wallahu a'lam.
Yeah, this is more similar to a non-limited liability company, like partnership firms, etc. Known in many countries, like in Malaysia and other countries. Okay, thank you for the questions. We have one comment from Tayu Mutio Atanda, that the share basis makes you understand the clauses better. Thank you for sharing your experience. And yes, once you go through the Sharia basis, it gives you the underlying understanding which you can apply in other standards as well, as Brother Mishal mentioned earlier. One question by Ahmad Khidir: more explanation on Bay' al-Bara'ah. You want to address this, Brother Mishal? Bay' al-Bara'ah.
Okay, generally the ruling is the default ruling. Something maybe inshallah, if you guys progress after this, you'd understand that we have something that is by default, and we call it muqtada al-aqd. So by default, when there is a sale, if I buy something from you, and then I find a defect that is pre-existing in that thing, in that asset, then I have the right. They call it khiyar al-aib. I have the right to return it. To return it to you and receive back the price. However, there is one type of sale. It's just a condition in the sale. As a seller, you can make a condition that says any defect that you find in that asset I sell to you will not. You cannot return it. You cannot have the right to return it. Now, this is accepted by the standards, but bear in mind that it has some conditions before that condition be valid. So the first condition is that you must not know of that defect. So you must not deceive me or conceal that defect knowingly and then sell me that asset and tell me that it's bay' al-bara'. It's bay' al-bara', you don't know, but you don't want to have a conflict in the future, and we agree that this sale, I would not have the khiyar al-aib in that sale. So this is, I think, the main condition. I don't recall any other condition that relates to it, but this is another condition is that it's an existing asset. So if you sell me something that you will make in the future and you tell me whatever I make you have to accept, this is also, it cannot be based on bay al-bara. It has to be according to the specification I gave to you. So these are two conditions that apply to bay al-bara, but this is the concept. The concept is that it's against the default ruling that I can return a defective item, provided that you give that condition with, they call it a bona fide, or with good faith. You make that condition with good faith, not trying to deceive the other party. Allahu A'lam.
Jazakallah khairan. Just to add to this is that in Bay al-Bara, the seller must, I mean, the product must be something that can be tested and checked right at the front of the seller, so that the buyer can really test it and understand everything that, I mean, especially the material features that he's looking for, that it is all okay. Because if the material or the product is not testable, and later on when he goes back and he finds that there are issues, then he may have the khiyar al-aib or khiyar ruya. But in general, Bay al-Bara is where he is saying that I'm not responsible for it. Please test and buy it at your own risk. Jazakallah khairan. Okay, there is one, I think, just couple of last questions. One is on clause 4 of 6 on murabaha, where basically conditioning the profit depending on the rate of LIBOR that will prevail in the future. So you want to elaborate on this, Brother Michal? Basically tagging or benchmarking with LIBOR.
So I mean, benchmarking against LIBOR, it has two situations. One situation is that we agree that in the promise stage, before the contract is concluded, we agree that the price of the sale will be benchmarked against the LIBOR or any other benchmark. So this is at the promise stage, but at the stage, the second type is at the stage of the contract. We can benchmark against the LIBOR or any other benchmark, but it has to be fixed now. So it can't be according to AAOIFI, it can't change in the future. So generally, or usually when we have variable rates in conventional banks or conventional loans, the LIBOR benchmark is used after every interval. So after every interval, that the interest that is payable changes based on that benchmark. But in murabaha, according to AAOIFI, after the contract is done, after the contract is concluded, it can be concluded. Let's say we agree that the price of the car or of the vehicle that is sold is going to be the principal plus in the future. I mean, at the time of the contract, we can look at the LIBOR plus any premium. Let's say LIBOR plus 5 or LIBOR plus 6. So now the contract, let's say the car cost is 100,000, and then LIBOR at that time was 5%, and then we add a premium of 5 or 6%. We have 11% on top of or markup on top of the cost price. Now that price will be calculated at the time of the contract, and now eventually you will have a fixed price. I think I made it a bit confusing, but generally it's at the promise stage. We can promise that we will use the benchmark in the future to determine the fixed price. But at the time of the contract, the benchmark has to be the price has to be calculated based on the benchmark, and then it's fixed throughout the financing period. Let's say it's 5 years. I know exactly how much I'm paying according to AAOIFI.
Jazakallah khairan. Just to add to this, so in sale contracts, we cannot have the price variable, so the price must be fixed. Now, even though if it is based on a benchmark like LIBOR, which is basically an interest rate benchmark, is still okay because we are not charging interest, we are taking that as a benchmark. Definitely an ideal situation would be to have an Islamic benchmark which is prepared based on Islamic financial contracts or some real economic situations like maybe real estate properties, etc., or industry specific benchmarks. But even if LIBOR is used, Sharia-wise, no issue as long as the other Sharia requirements are met. Now, if it's an ijara contract, it's a lease contract, the requirement is to have the first tenure or the first period fixed, and later on we can tag to a known benchmark which is known to both parties and doesn't have much variations. Like it doesn't lead to the level of uncertainty which may lead the parties to dispute. I think that is of something very important. Otherwise, we can use that. Jazakallah khairan for your question. Next question, I think it's most probably the last question. Please explain clause 12/2 from Wakala, Sharia Standard number 46. Okay, let's navigate to it. Okay, so it's about investment agency for the financing of working capital. Investment agency can be used as a substitute for an overdraft. The amount provided to the client is regarded as the institution's undivided share in the working capital of the client. It is permissible for the client to use the withdrawn amount to settle the client's liabilities relating to his activities and employees' salaries. The client is entitled to a fee for his service and profit from his portion of the working capital, and losses occurring after the agency, if any, are borne by both parties on a pro rata basis. If the client has any interest-bearing deposits or loans, the institution should stipulate that the client is solely responsible for them. So this standard is about Wakala al-Istismar, or investment agency, where the investor will appoint the agent as their investment agent for a fixed fee, right? As we know, in Mudaraba, we don't have a fixed fee. We have a share in the profit. In investment agency, we have a fixed fee for the services provided as cost. It is mentioning the use of investment agency as an alternative for an overdraft. So in case of overdraft, what happens is that the client entity or the company can withdraw from the overdraft, which is basically a loan for the working capital requirements. But in case of investment agency, we can do something similar or closer by using the principle of Wakala bil Istismar. So what will happen is that the client will have the capital in his company as a investment from the investor, from the entity or the financial institution, because he will also putting some service from his end. So what will happen at the end, that he has his own key because it's his company. The bank or the financial institution is also putting some capital which the bank owns, and against that capital, the entity is a service agent, investment agent. So as an investment agent, he may be entitled to certain fees, but on the other hand, when there is a profit on the whole company, the profit will be divided based on the share of the capital, the bank's capital, and also the client's own capital, and then shared according or firstly on divided on the capital, and then for the bank's capital portion, it will be entirely enjoyed by the bank because it's an investment agency. It's not mudaraba or it's not musharaka on bank side, whereby the proportion or the portion of the profit entitled by the client's capital is enjoyed by the capital. When there is a loss will be borne by both parties on a pro rata basis. So let's say the investment through the investment agency, bank has invested, let's say $1 million, and on the other hand, the client already had an investment of $1 million previously. So if there is a loss, the loss would be distributed 50-50 ratio, because the ratio of the investment is now 1 million plus 1 million, which each will be 50% of the total capital. So this is just an example of where the client can use the investment agency as a substitute of overdraft. The clause also mentions that when the client does not require financing anymore, then the relation may be terminated on the basis of takharuj, which means that either the joint account is distributed by them pro rata, or one party will purchase the share of the other at the price agreed upon that during the time. So once the capital has been infused in the client's company, let's say company XYZ, and just like overdraft, the funds have been withdrawn on a need basis, on a wakala bil istismar basis. But what happens when we don't need the fund anymore, right? So then we can have the principle of takharuj. Takharuj is basically exiting on a mutual agreement. So the investor here, the bank, will exit from their investment. Now it can be either that the joint account is distributed between them, pro rata, that the account, the amount that is there, it can be distributed by the parties based on the pro rata basis, or maybe the client will purchase the share of the bank at a price to be agreed upon during that time. It's not pre-agreed to avoid any capital guarantee. So that's two different scenarios of takharuj, which is basically termination of or mutual exit based on agreement. So that is a different thing, but this clause more talks about usage of investment agency for financing as a working capital. This session was brought to you by TAIF and Adel. If you have benefited from it, please share in your social media platforms about both the entities and share the word, spread the word. Jazakumullah khairan.